I got a question this past week from a couple of guys who are looking at trying to trade more range-bound markets. Their strategies are more based on sort of reversion type strategies and trying to play back towards the middles of ranges. So they're looking at how to identify a range, how to identify when to not play certain types of strategies. So basically, trending versus range in markets. So what I want to cover today is early clues so that you can immediately set yourself towards, right, this is going to be more trending or this is going to be more ranging, and play the appropriate strategies. The difference between, and we'll look very briefly at getting a bit bigger picture to try and help you manage the difference between volatility and trend. As volatility increases, you're going to get bigger ranges, but you can still have very range-bound markets in very volatile markets. It's just that they'll zip up and down a wider range compared to normal, as opposed to a trending type market, which becomes very one-directional. And that's the key distinction between the two. So, question I got asked, how can we find a faster way to spot whether or not we're in a ranging market or trending? And also, are some markets more ranging and less trendy by nature? To answer the second question, I would say on the whole, no. Unless you're going to go into spread trading, where two very similar contracts should stay within within a reasonable type range, they're going to be more range bound. So if you want to go into sort of spread trading, particularly trying to spread down a curve, i.e. August oil against September oil, they're not going to diverge from each other very far, and there will be a sort of typical range that they will trade within. But on the whole, an individual market outright is unlikely to be necessarily more rangy than another. So, how do you know whether we're on a trend type day or a range type day? And I've talked about this idea before. Simple key identifiers of each. This is what you want. What you want to try and do is you need to simplify things down and sort of be able to tick off and say, right, this has got the hallmarks of trend. Is it now showing signs that it is trending? Is it still trending? That's the way you need to try and look at it. Equally, range-bound markets, and we'll go and have a look at how you can potentially predict a range-bound market, and then also the importance of bigger picture in a little bit. Key identifiers then, trending markets, small initial balances. Out of that initial balance, so that's the first hour of trade, or if you're looking particularly at some of the markets that trade these sort of lighter volume sessions overnight, the hour out of that lighter volume. So you're looking at currencies, once you get into the European session, and volume obviously picks up. Likewise with European equities and bonds, you get a distinct pickup in volume from 7 o'clock. Once you come out of that initial balance, so that needs to be small. What that's telling you is that people early on are slightly uncertain. Then, when you get a larger participant takes hold of the day, not in a manipulative type of sense, but in the sense of they cause a direction, that will create single prints. Once the single prints on a profile have been put in, you're then looking for small distributions to consistently build in that direction. I'll give you the anatomy of a trend in a moment. Ranging markets, on the other hand, will typically put in a larger non-directional initial balance. So you will have an initial balance that may open, trade up, trade down, trade back into the middle, something like that. And this will typically be wider than an initial balance on a trending type day that may open and drive up. What you're then looking for is that on any escape of the initial balance, this fails, and likewise to the other side. Once that's happened, you're pretty much on that this is going to be a ranging day. What that's telling you is people don't have the conviction to keep buying at the highs, nor do they have it at the lows. Therefore, you're going to get this range-bound market. Ultimately, the distinction between the two is a range-bound market will see two-way action, so you will see as much buying as you do selling. A trending market will all be driven by one buyer or one seller. Not necessarily one individual, but direction of trade is all driven in the same way. When we have a look at bigger picture, what you also need to question is, are you perceiving volatility or liquidation as trend? And ways to look at this: ATRs, liquidation moves, big picture. And I'll particularly bring up gold this morning, which I think is a very important one to look at from a big picture point of view. Right, so this will be a trending type move. This is a move higher in the pound. Quieter overnight session, doesn't do a great deal. And then you get this distinct push higher, followed by absorption. We put in a lot of volume, and what's happening here is within this range, whoever's trying to buy, they're not trying to buy through highs and push the market higher. Instead, what they're trying to do is they're trying to buy as much as they can, as cheap as they can. So they let people sell to them and they just absorb everything. So as soon as you've seen a small initial balance followed by a push out, up or down, followed then by absorption, you're ticking all the boxes of this being a trend type day. So if you're playing range-based trades to play back towards the middle of range, this is perhaps not the day for it. If you're inclined to play more passive trades, what you want to be doing is playing passive trades from here in this direction. So playing that small range, but playing it from the upside. So playing long into the range. And we see this then repeat for the rest of the day. Another small range after a push higher, followed again by another push higher, small range, and then as the day progresses, you get this more grinding move. What typically happens as well with a trend, close at the extreme of the day. Now this is important with a trend. You don't know where the extreme is going to be, but as long as you're recognizing these points, this then gives you the opportunity to hold on to that trade until the end of the day. So it becomes a time-based trade. You can have a shorter term time frame trend move as well. So this is a trend move that doesn't actually progress into a larger trend, but you still see it from a profile basis on a short time frame. Small initial balance, single prints out, more single prints, and all the way through this, what you're getting is these little dips of volume. This is where the next leg of selling in this instance has come in. It's where the next push comes from, and then you accumulate little ranges above. So we had a little bit of accumulation here, we then get a larger amount here and here. We then start to see a turn, and as soon as you start seeing these areas filled in, that's the indication that your trending day has ended. So you have two ends to a trend: either close at the extreme and it will maintain those low volume points, or it will fill one in, and that can be the end of trend. Right, ranging markets. I may well have used this example, or certainly in a previous debrief, but this is a fine example of a ranging market. Pretty wide initial balance compared to recent ranges, and that's what you've got to be thinking about with initial balances relative to recent range. So this initial balance here is around about 30 plus ticks, about 30 ticks, when previous ranges were rarely pushing more than around about 100. If you get into this area over here, ranges are sort of falling into the more like 45, 50 tick range. So 30 ticks is a big proportion of a daily range. What you're then looking for, here's your first clue that we could be on a range bound market. Break the highs, no building of value higher, no absorption from lows to keep the move going. Instead, it's just break high, straight back inside the initial balance. The next bit of info you're looking for is the break of the initial balance to the downside. That comes here. How's it go to go down? Nope, turns straight back up. Your thought at this point, which is now, this is a European market, about 8:45 in the morning, you've already concluded that this is highly likely to be a ranging day. At least it's looking even more unlikely of being a trending day. And you will then get continued trade from the edge of the initial balance up here. Break of the initial balance, fails to get the move down. Once you break that resistive point, this little blue line here, this now becomes a further reversal point for the rest of the day. So they're the sort of key bits that you need to focus on. It's about really how that first trade begins. If you start off with very quiet first hour, that's giving potential to trend. Then you need to see that enacted with a push out and then absorption to keep the move going. With a range, you'll see that larger early move, followed then by an inability to progress on from there. As soon as that's happened, again, by this point, come 10 o'clock, you've now had it very much confirmed, and this is looking every way a range day, and in every way, certainly not a trend day. Can you predict a range band market? Yes, within the realms of plausibility. You can't always predict it, but one of the easiest predictors of a range band market is opening in the middle of a volume cave. Cave of volume, no real reason, or what you need to be thinking here is that this needs to be filled in. Imagine balancing this profile out to make it look like that. To do that, what you need to do then is spend a fair bit of time trading between the high volume points, which is exactly what happens. You've also got support down here at 69 from previous highs and trend at 61, which is why we stopped. So you then bring in your chart references as well. But this gives you greater conviction that it can hold on a pullback because of the fact you've got this cave to fill. To fill this in, you need to see trade up and down within it, which is inherently range bound. So that's a way of predicting a range. You don't always have that opportunity to predict a range bound trade, but when you see this kind of thing and an open, importantly, in the middle of the low volume area, not an open up here. If you open up here, you've got a whole different scenario, which may be a different mental session. But open in the middle of range there, the first thought is going to be we've got support down here and we've got resistance up here, and then you can play your range trading strategies from each side. So it kind of pre-establishes the highs and lows of range within a number of ticks. Right, trending markets versus liquidating markets. What we've got here is a trending market, higher in gold. Trend moves are typically steady. They will move higher, they will build, they will move higher again, they will build, they will move higher again, they will build. What's happening here is people actually want these positions. So if you want to buy something, you still try and get the best value for it, or the best value for your money. So you don't run in and just pay whatever price is there. You will wait and see if you can get a better price. Think about this when you're going to buy something. You'll probably go around numerous shops to see if you can get a similar thing for a lower price. And that's what happens in a steady trend. With a liquidation move, however, what's happening here is this is positions exiting. People panic when they start losing and are much quicker to get out, which is what creates these faster moves. So this is a liquidation move. This isn't necessarily trend-like. These are the harder ones, but these will often follow a period of range. And what you need to be thinking about, this is bigger picture here, so not the indicators early on of trend or range, but bigger picture here, what you want to be looking at is if we're stuck in a range, people are playing a continuation here, but volume's building up. Increasing volume is an increase in energy, basically. Now there's more energy. If this breaks to the downside, this has got much more scope to drop because of the amount of energy built up, which then creates this liquidation type move. So do be aware of the distinction between a trend and a liquidation, which I think I did a mentor session, perhaps not last week, the week before, on the difference between the two and how to identify one over the other. Liquidation moves don't typically then continue onwards. They will put the move in as people get out, and then they will stabilize, and they'll in fact then range after the liquidation. So just be aware of that you're not confusing liquidation with trend. And the other way of looking at ranges is that you've also got to make sure you're taking into account volatility and range. So what we're seeing here, big drop during coronavirus. We all know about that. We all know about the massive 20-30% drops that we saw during coronavirus. But after that, and this was particularly related to the question I was asked, that the person asking said there's been too many trendy days in the S&P since. I'm not so sure that there have been, but what is very clearly apparent, this blue histogram at the bottom is the range traded on the day, and the gold line is your average true range. And what we started to see here, 250 tick ATR, it's now down to around about 80. This is Euro stocks, incidentally, not S&P, but similar kind of thing. So what that's telling you is that we could have a market that ranges but puts in a 200 tick range. So whilst it will feel trend-like, it will still very much have the characteristics of being range-like. It will just be more volatile up and down the range. So make sure that you're managing your range expectations based on volatility. So we're seeing very high ATR, then make sure that you're considering that range-bound days are still going to put in much larger ranges than you might normally be used to. And so what could feel range-bound, or what could feel trend-like, is actually probably still ranging. It will just trend within the range. Very tight days, it still trends within range, but that trend is very few ticks, so it doesn't feel like a trend. Take, for example, this area here. Putting in decent range in this area, this is around about a 200 tick range, and you see a fair few days sort of up and down the range. That would perhaps, and likewise here, that's an even bigger range. That's around about, excuse me, that's around about 250 ticks. And within this is completely range bound, and we'll trade up and down that whole range most days. So it's maintaining very high range, around about 200 ticks on a day, but very range bound trade. So just bear in mind the difference between volatility and range. Because you can play a range bound strategy in a volatile market, it will just end up giving you more. Final thing I wanted to point out, and this was very nicely pointed out to me this morning on the recent or the new career program, was big picture in gold. Making sure you've got a view of your big picture is massively helpful. So that where we are now, we are trading up above 1800. Highs from back in 2012 were around about 1800. You've then got record highs which come in at 1920 back from 2011. We're now in a position where this could well trend. So what's happening is now there's very little to stop gold above here. This is not a prediction of where gold's going, but the point being that whilst we're above here, this could well turn into a trend type move. So meaning that you should be more inclined to play to the upside than to the downside. So the downside, you've got very little to sort of lean against. So it's about also in that bigger picture of thinking about, well, how much reason have people got to sell gold up here? Not fundamentally, from a technical point of view. Similar type idea here as well. Once gold, going into the end of last year, broke out of this triangle, you got a very straight line move. Because now the reason to be short gold is running out. And so that then gives you this larger move. So make sure you're also checking your bigger picture as to whether we're in a situation where a trend is perhaps more likely to begin from. And when I say trend that, I mean in a bigger picture sense, generally continue in a certain direction. Right, I'll wrap it up for you there, guys. Hopefully that's been helpful in trying to establish characteristics, but also make sure that you're considering the larger picture and volatility when you're looking for range versus trending markets.